Hello, this is Patrick. Welcome to Chart Built Wealth, profitable investing with technical analysis. I want to give you a brief update tonight after all the action in the market. The recommendations have been solid. We're in good shape. And with that, let's get into it. First, I am out in California on Pacific time, and I realize this is really late for those of you in New York, Chicago, etc. So I'm going to try to do these either during market hours or right after the close going forward. So here's the S&P 500. We're short. We're betting this is going to go down, and this is just one position for me. As I've talked about prior, I'm 10%, 12% short, and here's where I went short on January 15th. And prices stay below the prior high. And here's where we are currently. I'm expecting we're oversold, but not much, really barely. So yeah, we could go down further. We're on our 250-day moving average, which is what I use as opposed to a 200. I think it's more accurate. And I still think, short term, we're probably a day or two away from a couple of updates. So I will be going neutral either tomorrow or on Wednesday when the all-important CPI, Consumer Price Index, comes out, which will talk about inflation. And with oil prices as low as it is, I think it's going to come in lower than expected, which will get people excited and start thinking about rate cuts and all those good things. So um, anyway, I think we're getting close to a near time term low. Nothing goes straight down. And that's where we're at on that. It's working out well. Crude oil. Here's the consolidation that I've been monitoring. And we're going to take a closer look at this, only we're going to look at it on with the ETF that you can purchase, OILK. It doesn't issue a 1099. And here's the 1, 2.5 year symmetrical triangle. And we're on our support line of that. And again, this is a weekly chart. It could dip slightly below during the week and still end up back above that. And that would be good. And we got our stop at 39. So I really like this. Our reward to risk is really favorable because if it holds this and prices start turning up, it could be really, really bullish. We could get a lot of upside. And, what would make that happen? Again, as a market technician, I don't want to rationalize because the markets are irrational. They're driven by human emotion. So when people get too over pessimistic, like currently on oil, I showed you the commercials chart on how the big oil companies are really, really bullish right now on oil prices. They think prices are too low, that they can go the other direction. What could do that? Some geopolitical risk, some invasion of who knows where in today's world. So, anyway, that was the recent recommendation. Uh, Antero Resources, a natural gas company, so not oil. They probably have some oil exposure, but it's really a natural gas play, and natural gas looks pretty bullish. Again, we went bullish just a couple days ago. I want to say it was on Thursday, and based on this pattern, we got like a $63 price projection, and we are currently at looks like 35, 34. And we have today up over 3%. So what do I do on a day like that? I sell a little bit. If I have 100 shares, I sell 5 shares. So that's the thought process there. China, FXI, uh, really been in a straight up mode. You can see my stop is still way down here. I'd like to get it up here and kind of lock in some gains, even though, of course, what do I do when we get big up weeks and up days? I sell. I sell a little, I sell a little, I sell a little. And then you can see today we gapped down to close to 3%. And so, all the shares I sold last week, I bought a couple back, not a ton, because we're way away from our breakout point. This was the time to load up. Now I'm just kind of backing and filling. I'm when I sell and then I can buy something lower, I'll buy a little bit of that back. And I do think there's still a lot of upside in China, but it's gone, it's had a big move. So don't be too aggressive here. Saudi Arabia. So when we purchased that, I said, we were coming into a bearish rainbow convergence when all of these moving averages come together. And I said, I wouldn't be surprised if we had another down day or two. And of course we did. And then today it started out lower and then it kind of recouped that. So I'm expecting either a pause here or a retracement back to this convergence. And the big test will be once it gets back here, can it break through? If it can't break through, it promises a lower low. So if it gets up here and I see some bearish day where it starts out low and goes all the way up there and then ends at the low of the day, I'm going to unload this thing and take my gain and ride off into the sunset. So a lot going on with Saudi Arabia and a lot going on with a lot of things, but that's the outlook for Saudi Arabia. Still bullish. Copper, I'm going from bullish to neutral. So I went bullish here. I went neutral way up here. I went bullish here. I got stopped out here for a small loss. I went bullish here, and here we are. I'm going neutral with a nice gain. So why am I going neutral? Well, here's the big symmetrical triangle, the big consolidation. Until it breaks out of here, this is resistance, and here's support. And so I think with the CPI, the Consumer Price Index coming out measuring inflation, if it's uh, there could be a lot of volatility in this. So I don't expect to be neutral for a long time here. I expect to get back on this train because I think the upside is huge. But and there's a big fight globally over minerals and raw materials. So uh, I'm bullish on copper. I just want to give it a rest. Silver, same kind of thing. I'm staying bullish. It was down a little bit today. I want to say it was down 1.5% or something. So what was I doing? I bought a few shares. Not a ton, but I did add to my position. I'm pretty big in silver already. What would happen in a recessionary environment? Gold would do most likely would do well. Silver would do well too, probably not as much as gold, but in a inflationary period. So let's say the consumer price index comes out and it comes out benign and and lower than expected, which I expect. That's kind of what I'm hearing. And if that happens, you could see commodities sell off a little bit initially, but then what's going to happen if inflation is tamed? They're going to start cutting interest rates again. So if they start cutting interest rates again, what does that do to commodity prices? It's going to up inflation. So what does the market do? It's going to anticipate that. So you might see oil, you might see silver, you might see copper, you might see all those things off to the races again. So I don't worry about that. I look at my chart and this is where I'm at when things are down like today, down 2%, I buy a little. IEFs, this 10-year Treasury ETF. Again, selling when it was down. Actually, what I did was I sold up here on Friday uh, and bought more on the close, a little bit more. I'm just kind of buying back the shares. I really built most of my position down here. But today, was up again, 0.75%, which really helped my portfolio. Stocks are getting crushed. Diversification is key. You got to own some of these things. I don't like to own debt assets. Just put money in bonds and hold it. I do it when I got a bullish chart like I do here, suggesting it's going to 103. So I sold, a few shares today, not only on the 10-year, the 20-year, the 5-year, the 2-year, etc. Thank you for watching Chart Built Wealth, Profitable Investing with Technical Analysis. Please like and subscribe, tell your friends. think the advice is solid. Have a great evening.